Welcome back, and Owen's here to take us through the day's business news. Hello again, Owen. Starting with a milestone moment in internet history, the day Facebook decided to go public.
It's been some time coming, Claire, but when it happened, boy, did it set the markets alight. We'll get some more details on those numbers in a little bit. Is Facebook overhyped? Well, almost certainly. Is it overvalued? Maybe. We'll see when it actually starts trading in a few months' time. But what isn't in dispute with Facebook is that this filing and the start of this IPO has added a whole new layer of intrigue to one of the most enigmatic companies ever to come out of Silicon Valley. Yuka Roya has the details.
In his letter to potential investors, Facebook's CEO Mark Zuckerberg said the company was pursuing a social mission, making the world more open and connected. For investors, Facebook is all about money, big money. It's expected to be worth up to $100 billion when it goes public in a few months' time. Some warn of the risk of overexcitement.
The company, quite frankly, is priced in a very rich way, which means in a year from now or 6 months from now, there's potential downside on the price if you come in the IPO.
There's no doubt Facebook is one of the fastest growing tech companies in the world. Last year, it generated more than $3.7 billion in revenue and made a $1 billion net profit, up 65% from the previous year. The internet site is every advertiser's dream. With more than 800 million users in a network of 100 billion connections, it allows companies to post customized, targeted ads in a very effective manner. Analysts say going public is also a way for its founder and CEO to keep running the company the way he wants. The IPO comes after he turned down repeated buyout offers from internet giants like Yahoo and Microsoft.
It's always been extremely important to Mark Zuckerberg to remain independent. And I think the IPO in that sense is an assistant to his goal in that, he will have this valuation. It will be much harder for someone to acquire him once he's proven by the stock market to be worth $100 billion.
After the IPO, Zuckerberg will own 28% of Facebook's shares and have nearly 60% of the voting power.
Owen, you've been looking through the paperwork for this filing, and in it there are some candid admissions that will give one or two investors some food for thought.
Absolutely. It's a fascinating document, Claire. Essentially, Facebook is saying, look, we're not really sure we can make money out of this. Not the kind of thing perhaps you want to particularly read if you're going to part with billions of dollars to invest in this company. Some very candid admissions. Ultimately, investors are going to ask the question, can we make money from this company? It's worth looking at the business model for Facebook as it's put in this regulatory filing. Now, it tells us, for example, that advertising accounts for 85% of revenue. That's pretty good. That's what's helped drive those big profits so far. But that's going to leave one or two investors wondering, what else have they got in case the advertising drops? They can't really count on many other alternative revenue streams, not what you'd call a diversified company right now. And the adverts for those sponsored stories that you often see popping up on Facebook, those are the stories where advertisers can really make the money. Well, Facebook themselves say this is experimental. They're not sure that this has long-term value. They're not sure whether it can be a long-term driver. They're also saying that monetizing the Facebook platform will be difficult. Now, what they mean by that is, can they get all these inventors of various applications to continue doing that and to continue driving revenue growth? They also say that mobile phones will be the way forward. Well, we know that, of course, millions of smartphones are coming onto the market as we speak. But what they say very candidly, again, is we're really not sure how we can make money out of all of this.
And also we've seen other internet flotations that have failed to set the markets on fire.
You only have to look at Yahoo, for example, that was the new big thing 10 years ago, to see how far that stock has slid over the last 10 years, a company that's on the verge of being bought out, maybe even broken up. Perhaps another one, more recent one, is Groupon, the internet coupon trading site, floated last year amid great fanfare. This was the biggest IPO, we were told, since Google. Okay, it's performing okay, but you can't really say an awful lot more than that right now. Trading at around $25 a share. If you look at the share price since it floated just in the last few months or so, it's not really doing spectacularly. Okay, investors are getting some return, but it's not really the kind of return a lot of them would have expected when all the hype was surrounding this company.
In that paperwork, also some wonderful insights into the mind of founder Mark Zuckerberg.
Well, this is the really juicy stuff for me, because we had a very personal, if you like, letter from Mark Zuckerberg within this filing, trying to persuade investors, obviously, to get involved with this company, but also justifying what he calls the hacker way. One can only imagine what these investment bankers on Wall Street are going to make of this, basically saying it's not illegal, it's not an activity that should be condemned. Remember, this is in the context of a big debate right now in the States about online piracy. I picked out a few points here. He says that hacking is building something quickly or testing the boundaries of what can be done. It's not illegal, he says. Hacker culture is extremely open. And he also says that Facebook holds monthly hackathons. I think that's where they time each other to see who can hack into a mainframe or whatever in the quickest time. So great manifesto there, if you like, to defend the whole practice of hacking. I'm not sure if I can call it hacking here anymore.
Now, as you might expect, quite a few tech stocks in Asia have had a lift.
Yeah, you've got companies like Tencent, for example, big Chinese companies, obviously wondering how they can get involved with Facebook. Maybe they'll be bought out, maybe there'll be some sort of mergers down the line. Who knows? But they're enjoying the bounce off this Facebook IPO. Asian markets having a good day's trade. The Hang Seng up around 1.5%. The Nikkei, you can see, closing in the green. Not quite as spectacular. The other markets still trading as we speak.
Now, German Chancellor Angela Merkel begins a 3-day visit to China. On top of her agenda will be easing worries over the sovereign debt crisis in Europe. While she hasn't gone into specifics about Chinese contributions to an EU bailout fund, any investment is likely to come with an added price, as our correspondent in Beijing, Shannon Van Sant, explains.
Merkel's here trying to restore faith, Chinese faith in the Eurozone and the stability of the Eurozone. Europe is China's biggest trading partner, so China has a really big stake in the financial health of the Eurozone. And European leaders like Merkel are trying to attract Chinese investment in the bailout fund of the Eurozone. Now, some Chinese experts say that if China were to invest in the bailout fund through the IMF, they might want to demand certain things in return. One of those things might be an end to a ban, or to restrictions rather, on high-tech exports to China. And there's also talk about a lifting of an arms embargo imposed after 1989 to China. So there are certain things that China might demand in return if it were to invest in a bailout fund, which Merkel is trying to convince them to do. However, many experts here in China believe that Chinese investment in a bailout fund for the Eurozone is extremely unlikely. And one expert today at a think tank, he said, loud voices in China would oppose China putting more money into Euro bonds.
Shannon Van Sant reporting there. Thanks very much, Owen, and thank you for watching. Don't go away.
The latest trends in food, the best places to eat, all the insider news on products and places. France Bon Appétit. From star chefs to food critics, from farmers to bakers, from local producers to winemakers. Meet the people who are making the headlines in French cuisine. France Bon Appétit. Essential viewing for lovers of French food. Saturday, 6:45 a.m. Paris time on France 24.